Okay, good morning, guys. Can you hear me loud and clear? Just let me know and we'll get started. Can you hear me slurping my coffee? Who got in today? Andrew, fantastic, mate. How are you? All right, let's get this up and running. Thanks for joining me. I hope you had a good weekend. Time to relax, I guess. Anyone that's a father, happy Father's Day for the weekend. Now, the US is closed tonight. They've got a Labor Day holiday, I think, tonight. So US stock market's closed. You'll get the futures obviously going. There might be a short. I'm not 100% sure, but anyone that trades the intraday, well, the SPY overnight, or the ASX200 might have a shortened session. I'm not 100% sure um, where it closes at, say 1 a.m. or something like that. Australian, what was it? Standard time. So it could be a shortened session. I'm not sure. You just have to check into it, Google it, and find out if you do trade it and you're wondering why it stopped moving. It's because the US will be closed. And you wouldn't expect too much to happen overnight. Now, US on Friday night was pretty buoyant, held in there. G'day, Laurent, Bobby. They held in there okay. They finished the week on a positive note. It was the last trading day of the month as well. So it could have just held up into the close of the month. They come back on, pretty much the shares will come back on tomorrow night and then just see what happens over the next 24 hours or so. Now, tariffs kicked off, and that's what you get the market movement on the open. You can see this is the Dow. It's gapped down on the open, popped down. Actually, what did that drop? So from the close, 23,369, it pushed down to dropped nearly 300 points on the open this morning, early hours of the morning. Gold spiked. The currencies moved around in the open too. So if you go and have a look at some of the charts, just the open, it was at 7:30, 8 o'clock in the morning. Currencies opened at 7, I think. And so the yen was, it was down, I think. Other currencies moved around. The Aussie gapped on the open as well. Gold gapped up. I think it's holding on to those gains for the day. So what it lost, say $7 on Friday night, it's made back plus a little bit more on the open today. Now people will be wondering what that is. I think it's just because the tariffs are kicked off. I mean, everyone knew they were coming, but I think what we saw on the last day of the month is notorious for window dressing. For funds, they want to keep it up there, get their bonuses or whatever, and then they let it crumble, in the following couple of days. Well, potentially, it's happened a lot in the past. It's well known, and don't be surprised that will happen. That's what happened on the ASX on Friday, final day of the month, up 100 points, and that was, in my opinion, out of the blue. We shouldn't be that strong a market. I wouldn't have expected. So it did crack a level on the ASX, which actually we'll take a look at now. Let's just go over here. Actually, let's go right here. So this is, you can see the ASX, we popped up through this high at 65.45. We pushed up through that high and it took off. So that would have cleaned out a fair few short stops, which, is fair enough. Take out a few short stops, but the key level is still at 6,600 level, which it closed at, was it 66.04. So it's right there now. It would be interesting to see. Wouldn't expect it to open up there today, being that the markets are down on the open. The US markets, you look at pretty much the whole kit and caboodle is down. That's the Dow, the broader market S&P obviously gapped down on the open. DAX, they did the same. UK, they all did the same. And gold, you can see you got that gap up on the close. So sorry, on the open, it closed around at 1520 mark. This is on the CFD, by the way. The futures were somewhere around 25 or so, I think. Remember, it gapped up about $10, and it's holding there. It's still holding up at these highs. So it's a strange one. I just read on Twitter someone saying, why are we getting this movement on the open when everyone knew about the tariffs? You got to remember, there's a lot more than just tariffs moving the market. There's these sort of shorter term things. Like I said, window dressing, I think, is a big one. Come to the end of the month, it happens a lot. Not all the time. but they do get window dressing. So the strength, I reckon, in the ASX200, a lot of it could be just due to window dressing. You know, they're popping it higher, and you can see that when it started rallying, any pullback was bang. Any someone that come in with a bit of heavy volume, bang, it was straight back up again. So the algos and all that were kicking off. They were just in buy mode all Friday on the ASX. So yeah, strangely strong. But we'll take a look at that. We'll see how that goes today, whether there is a bit of a sell-off as, gapped up last day of the month, where we start a new month in September, and whether we get a bit of a sell-off today. US is closed tonight, so we could drift lower on just people wondering what's going on. Again, when we talk about tariffs, in my opinion, nothing's changed. You've still got the inverted yield curve. Hong Kong's kicking off too. That could be an outsider that's going to pressure the markets. Worry about that, what happens with China, and extrapolate into all these different things, what could happen between China and the US. And in essence, they've done nothing. The China and US have done nothing. Tariffs are increasing. They keep talking up a deal. Even Trump came out the first thing in the morning. He made sure he got up and got started on the markets, put his Twitter out saying they're looking forward to doing talks. Yet they're giving nothing, absolutely nothing. So there is no date for the talks. I don't think is set yet. They're saying sometime in September, which they could drag that on and see if this market can kick on and try to buoy the market while they're trying to sort out whether they're actually going to have talks, and if they do, what's going to happen. There's so many ifs for the bulls, yet a lot of hard and fast evidence for the bears, in my opinion. I don't want to be bearish or scare anyone, but it's just always keep that in the back of your mind. If the market's rallying with this sort of environment, it could easily turn. But at the same token, when you're talking that everyone's potentially bearish and is getting short position, I mean, they could be positioning short at the wrong times, completely at the wrong times, and they're fuel to get squeezed out. They can easily get squeezed out on a bit of a rally. So there's a lot of these factors to take into account. If that trend is up and you don't know why, you don't fight it, you try to follow it. Like we're talking about this entry, I think it was that entry somewhere around there, that continuation trade. There's one here that was probably the right one we're talking about, 5 o'clock on the 29th. So, if you're looking at that thinking there's going to be shorts in there, people will just short the market on a whim and a way because, I've got a nice wide stop, it's going to roll over, and their ego is telling them to short it rather than the charts or rather than the fundamentals or rather than anything else. It's just their ego saying, oh, this market, we broke through that support, we popped up, we're going to get a double top, I'll go and short in here, but no other reason. And if I have a nice wide stop, I'll be right. Problem is because they're not trading from a technical perspective, they're just becoming fuel or fodder for a bit of a rally that's going to squeeze people out and go further than what they think. Happens every day of the week. Every stock, everywhere. Currencies, these sorts of things are played out time and time again. So if you're not watching your entries, if you're looking to short here, there was nothing that played out here on the short side, then you know that you're on the wrong side of the market. So you just sit and wait if you want to short it. Now, one thing we spoke about was this extension. You can see that was the first lift up before we had some sort of corrective action, and that was the second lift up. So it took us right into that resistance zone. This is on the Dow, but if you look at the big S&P, that's still that key resistance at around 29.40. It's backing off from there now. So this is the broader market. The Dow could easily, because it's only 30 shares, it could easily wash different levels. And it can do it. It does it time and time again. It's got that key resistance at 26.4, cleaned it out, finished back below it. So on a daily candle, this is an hourly, don't forget, daily candle, it's more of a rejection. I don't know if I could show you that, but if you go and look at something like that on the daily, that's more of a rejection of the highs, that resistance zone, and that will probably clean out a few, longs would have got positioned there going, it's a great day, into the week on a positive note, they turn around and get squeezed back out again. And especially when the market gaps down on the open today. So not too positive. Who knows if this just doesn't turn into a higher low. We get this big washout, flush lower, bounce around here, and then start to, as long as we bounce around here, this is the two things, excuse me, the two things you want to be careful with. And the way I think you want to attack the markets. So if you're looking for a short, ideally what you'd want to see is this rally back up, retest it, and then it starts to fail off that level as sellers start to come in. So what that's saying is that weighted numbers are ready to sell. They're not going to sell down here because you've got the chance it's going to bounce back to that resistance zone. So there's no real selling in here, but because the weighted numbers is waiting to sell, there's no buying either.
So you get this thin market that can easily pop back up. You get these buyers that bought it off that looking, feeling good, just rebounded back up here, and then they get bang. They could get slammed by some selling pressure. So that's ideally what you want to see if you're a buyer. A seller. Now from here, if you sort of get this pop down and start to chop around and hold some higher levels, ideally that's what you want to see if you're a buyer, because it's not pushing back up. The selling's coming in, but it's getting soaked up, sort of at this level, and that's what you want to think. Well, that's ideally what you want to see if you're going to get that higher low build, and that high low is going to hold just below this resistance, especially after this move. Because if this is a washout, one or two things it means: it's a washout, and the shorts are going to start piling in, and we get this sort of price action, or it's a washout and it's clearing the way. It's clearing the way for a rally, and if it's clearing the way for a rally, obviously you want to see that high low build, press up, go straight back up through 24, and then on we go. Okay, and then if, from what I've just described, forget all about it, all about the bearish price action, because if you get this, you've got to go with it. And if you're a bear because of tariffs or whatever, the trade war, just what I said, they haven't done anything, it doesn't matter. This market can easily press back up. So just bear that in mind if you're looking for, shorts or longs. Don't try to be biased. Wait till the market starts showing you what it's going to do, rather than, let your ego be biased down or biased up. So that's the Dow. That's what ideally what we get, the same action. It'd probably be more prime here, being the broader market. Your 500 stocks as opposed to 30 on the Dow. If you get that sort of chopping around here and holding, looking like it's going to hold under some selling pressure and holding minor higher lows, could easily be prime down here. And then pop, you'd expect the longer it spends holding these higher levels and get sort of that cup formation, I'd expect that potentially is going to go, or you can have a shot at the long here. The fact that it's going to, presumption it's going to go straight through 29.40. But the US is closed tonight, so it could be more of a muted sort of a session. So just bear that in mind. If you're going to go for shorts, you probably want to see some sort of reaction back up, a pop back up on a thin of a sort of a market, and the sellers start to pile in at a lower level. Sellers start to pile in below 29.40, essentially, meaning I would expect this market to start driving lower, and that would fit in well to the price action as well. 1, 2, 3, 4 tests of that 29.40 zone that has reacted low off that 29.40. You've got these two legs up, and that's not a positive grind up. That's still, sentiment could be a bit shaky. So we'll see how that goes. No, Bobby, I don't. If I'm talking about, say, the Dow, I wouldn't go long break of this. For me, it's just you're going to be too late. So if you're looking to go long here, even if we play out like this, and you go, okay, I'll go long on the break of that high back up through 24.6. To me, you want to trade off this level. You want to trade with minimum risk off a minor high low. You want to be front running that break. And if it doesn't play out, you've essentially got some buffer. And you want some buffer coming into that level, because it could easily, this is another scenario. You could easily, say you chop around here, you get your price action, you get your high low, it pops up, and then bang, spikes straight back down again. And the market could do that every day of the week as well. So all you're trying to do is see this type of reaction. Okay, then your premise is that, okay, we're going to hold a high low and we could potentially blast through here. Now I want to get on the long side. Don't want to be short, because you don't know what's going to happen up here just yet. You haven't even got anywhere near there. You're about, say 20 or what was that? 150 points away, or maybe 200 points away from that high at this stage. So that's a long way to run. Now, if you get in nice and early and you're getting off this higher lows, what you're setting yourself is a low probability or a low risk, and you can probably get 1 to 1 or 2 to 1 by the time you get up there. And if it just goes through and this plays out, great. If this plays out, you've got some profit to play with, a buffer. But if you start buying it on the break here, this could easily just wash out by 5 points or so. You get long, you've got your stop. You have to have your stop way down here, a 200-point stop, just not the way to attack it. And that's why I'm always talking about this sort of price action and this sort of price action off the lower high. The lower high or the higher low minimizes your risk, and it's an earlier sort of an entry style where if you're wrong, you're not going to get smacked. But if you're right, you're going to get more. So if you're right and this does go through, say like this scenario, and plow through here, you know that it's probably going to be a lot of retail will be sitting up there waiting to buy on the break back up through that level, or even up here. They could be looking to buy. Why wouldn't that work? just get that buying a breakthrough here. Good on them. You know, if they buy a breakthrough here, there's technically you stop. Even if you got something like this, your stop's going to be way down here below where it should be. And a lot of people trade. Okay, I buy on the break there, and I'll have a 30-point stop. To me, that's just wrong because a 30-point could put you right still in the firing zone. If it pulls back, you know, pops up through, gets you in, pulls back, stops you out, goes again. You can be completely right. Excuse me, but you're in the firing zone to get stopped out. So that's why I'm a big spruiker of using stops below a key level. So if it comes and gets you, and it has to prove you wrong on your thesis or your plan before you're stopped out. You don't want to be proven wrong, you know, stopped out and proven right. That's the last thing you want. So you want, that's why I think also you'd be trading off, because you're going to get opportunities, you know, on the, if we just say on the idea is, say this is an hourly chart, for example, we might get, you know, so just say we're taking it from here, we might push down. No, that's not right. Let me just try that again. We might push down and do that price action. No, sorry, that's not what I want to do. Let me just try that again. So on this time frame, we might just push down and pop straight back up, for example, and then continue all the way through. So that's that could easily be your price action from here, down, up, straight up through the highs, and away we go. Excuse me. So that's your hourly time frame, but what you'd be looking for is to break down your hourly chart. Excuse me, I've got given cold and all sorts of thing over the weekend. Had a great Father's Day. So if this is your hourly price action, what you're looking to get the higher low off a lower time frame. You don't just technically have to stick to an hourly time frame. So you can easily get this. You know, this same price action can go like this on the you know, say on a 30-minute or 15-minute. You could get your entry here. So you're minimizing your entry as it's rallying. You know, you got a candle here on the hourly, but on the 30-minute you get a bit of chop, and then you get your entry. So that's ideally what you're looking for, and that's to minimize it at the right zone, potentially going into and breaking through that 24. Does that make sense? Just while I have a drink, clear the throat. Okay, so there you go. We got SPY's gonna be half open by now, down 6. So what's the SPY showing? Let's just have it go to the SPY where we get a chance. Did I get rid of it? I probably did get rid of it, didn't I? All right. Let me just see if I can get it. I think this is going to turn off. This will be the ASX200. I want to get the SPY. All right. All good. All good. All right. So what you'll have here is get rid of that. So the SPY's gapped down as well. So it's gapped down from the open, from the close on Friday, 68. It's gapped down about 20 points. So you'd expect this ASX, if it's holding down at 56 from a close of, it's another 10 points you'd expect. Yeah, the ASX to be down 10 by the 10 past 10 open, so down another 5 points from here. If everything remains the same, so we're going to get a bit of pressure on the open, but we'll see. If we bounce, if we get through that 65.43, that's not a seriously key level. It's more of just you're probably going to get that lower high coming to play. If we we sort of go around here, you just go to the 5-minute now. We could easily react off that zone, and we are stretching the 5. What you'd probably be looking for from here is we might. All right, why aren't you showing me any form? There we go. If we just start chopping around here and get that lower high come to play, that could be taking us back down to support at least, so you get a bit of a trade on, or straight through. because going from the higher time frame, 30-minute chart, that's probably going to be confirmed lower high. It's actually confirmed now, really. So that's your zone. Doesn't like me today. What's going on? Oh, I bet you it's closed. Yeah, thank you. Funny buggers with me. Sorry, just reopening this chart. Any questions while we're at it, guys? Because we'll probably just about finish what we're talking about. You want to shoot any questions? And remember, at the stream at 12:30, we're going to do, if you wanted to have a chat about your chart, a chart, and you're not worried about putting it up on the screen to show, then send through. It could be a winning. I don't care if you get it just a couple, a winning one or a losing trade. A lot of the time, it's going to be beneficial to put up some losers. Excuse me. I'll be happy to put up some losing trades I've done. I've got a whole heap I've done and marked up in the past. So I'll show you some from years ago, and I'll show you a couple that we've done recently. And just to give you an idea, and I'll talk through what I look for now and potentially what I was looking at then. I wouldn't have had a clue probably what I was looking at then. But yeah, feel free to send some through. And like I said, it's probably going to help out a bit more if it's a losing trade, because a winning trade you could be wrong and got lucky, but you don't know why. Even send through a winning trade. I guess we can talk through that too. And if I'm looking at it thinking, probably that's not my style, I wouldn't have traded that, but I can understand why it worked out well. Oh God, it's still going through me. Yeah, it'd be worthwhile chatting about. So we'll do that at 12:30 if I could survive, and then we'll try to do that each Monday. We talk about the markets, what we're doing. We'll look at some shares, obviously, and then we'll go through and just take a look at some trades, because I think it'd be very beneficial for everyone. I know it helped me a lot with Davin when I was learning away. I'll put up some trades, and he used to just drill through, good, bad, or ugly, even if they had some losers. And he said it was actually really comforting to see. You say, oh, look, I would have taken that trade every day of the week. It was still a long, but I didn't. I just got stopped out. So be it. It was good to hear that too. All right, it looks like the market's open, probably back up down 16. So don't ask me why the SPY is rallying. That's a bit strange. We're down 16 on the ASX. If the SPY's pop back up, this could probably just about be a sell if you get this candle. So I haven't got my platform open, but if that closes, which is probably going to close now, new candle opens, it could just about be a sell with a stop above here. But I don't like where the stochastics are personally. It's just popped up a bit strong. So that's where it closed. That's where it closed Friday. Yep, so that was at 6:55 on Saturday morning. We've opened down, popped back up to where we closed, which we should have mean the ASX is roughly break even, but we're down 16 on the ASX. So I think, unless it's going to rally, the ASX is finished open. I think I would expect that to SPY to potentially roll over, or at least down to here. If the ASX stays where it is, they could get sold off. But the fact that that's up here, probably the ASX could rally. Look, we'll see how it goes. Thanks, Lauren. Well, show me your winners, mate. You should be on here. I'll get you to talk tomorrow. All right, mate. Thanks very much for joining us, guys. We'll speak to you later on. Cheers. Enjoy your day.